logistics in 2023 on the African continent has proved particularly troublesome. If you think of the South African context, it's probably impacted the bulk commodity producers the most. Think about coal, manganese, chrome, iron ore. These guys really need to rail commodities down to ports and then for export. The troubles at Transnet has meant that, for example, coal has only been able to rail about half of what they were able to do 3 or 4 years ago. Whereas a year ago, 80% of transportation for chrome went via rail down to the port of Durban. Today, about 80% goes by road out to Maputo. But the question is always, will prices remain supportive of that sort of supply chain? We expect there will be capital that will be needed to be attracted into that sector, the infrastructure sector. And we think it's going to be a little bit like decentralized energy. We think it will happen. Private capital will be crowded in, and the very thing that is a disadvantage today effectively hopefully becomes an opportunity for us going forward.
I think one issue that we continue to see playing havoc on development and production in all of those regions has been infrastructure. If we consider that most of the metal that's moved is trucked, and so what we have seen is a significant shift away from the South African ports to Angola, to Walvis Bay in Namibia, back up to Tanzania, and then into Mozambique. If we come further south and we look at the bulk sector, I think what we do see is that a number of the big producers have cut back on their production forecasts towards the end of last year, and we see that maintaining this year, and that largely has to do with lack of available infrastructure, particularly on rail. And I think what we'll see is more private money entering that, and hopefully we see this year some improvements on rail in South Africa.
All of these logistics issues actually are problematic for clients because it ties up working capital. And so every day something is delayed in a high interest environment, it's effectively money spent. So they're looking to us for efficiency of product, efficiency of licenses inside of the markets in which we operate.